Hello and welcome to Budget with BS, a very special show on the Union Budget 2023-24 presented to you by Business Standard. I am Nivedita Mukherjee.
And I am Ruchika Chitravanshi. Together, we will bring to you the most important aspects of the Union Budget twice a week, starting today.
The backdrop of this budget is quite different from other years, isn't it, Ruchika?
Yes, absolutely. With all that has been happening in the geopolitical developments and the domestic compulsions, this is a very special budget indeed.
Well, the North Block, which houses the Finance Ministry, is at its secret best with less than a month to go for the budget on the 1st of February. But Business Standard reporters are going behind the scene to put together the nuances that will guide Finance Minister Nirmala Sitharaman's fifth budget.
In this first episode, Asit Ranjan Mishra, who tracks the subject closely, explains the reasons that set this budget apart from others.
When Sitharaman presented her fourth budget in February last year, the Omicron variant of the coronavirus was still raging on. As the third wave of the pandemic started to recede, the Russian invasion of Ukraine on February 24 came as a black swan event and fundamentally altered the global economic outlook.
The war has led to supply chain shocks and a significant increase in commodity prices, including fuel and fertilizer, thus bloating the government subsidy expenditure. While India has benefited by sourcing cheaper crude oil from Russia, one has to see how the price cap by the G7 countries on Russian crude and subsequent restrictions on ship movements play out for India. Experts also raise concern on the impact of rising COVID cases in China and the growing geostrategic threat from India's northern neighbor.
Well, first of all, I think, with the kind of upsurge of COVID cases which is taking place in China, there is an apprehension that there may be a similar kind of a upsurge across the world, not just India. And therefore, would that mean that, in India also, we should be prepared for perhaps another wave, which means that, the public health aspect has to be, taken into account in the budget. Secondly, there are also, threats with respect to security. And you have seen the kind of, activism that we have been witnessing at the India-China border. And that also means that certainly to my mind, there is no escape from committing ourselves to a larger defense budget for the next several years to come. And a start may have to be made by this budget itself.
The energy crisis and synchronized interest rate hikes in the developed world to fight record inflation have led to an economic recession in the UK, with the EU expected to follow suit soon. This has severely dented external demand for Indian goods. On the domestic front, while consumption is getting a boost from higher discretionary spending by the affluent upper middle class, overall consumption remains depressed. This is visible in the factory output figures. They show that the production of consumer goods has been contracting for more than a quarter now.
As the impact of higher interest rates kicks in next year, even credit growth, which has been growing in double digits for 9 consecutive months, may start to peter away. Without sufficient demand support from the lower middle income class and those in the bottom of the pyramid, economic growth may face significant headwinds in FY24. What can make matters worse is the languishing private investments, for which the government may need to keep the accelerator on public investment to support growth. I spoke to FICCI President Subrakant Pandey earlier on the budget. Here is what he has to say.
We expect it to be a growth-oriented budget, which focuses on the continuing revival from the pandemic and in fact take that forward. We expect focus on certain measures which will sort of go towards attracting further investment into India, especially global supply chains which are looking at a China plus one strategy once again.
With the general election approaching and increased chatter of high unemployment, the Prime Minister has directed all central government ministries and departments to identify vacancies and recruit 1 million by the end of 2023. This plan could well find iteration in the budget, with the government trying hard to change the perception on the job creation front. Since 5 large states, Karnataka, Chhattisgarh, Madhya Pradesh, Rajasthan and Telangana, will go to polls in 2023, the budget may also be high on politics and political correctness. Budget 2023 will also be presented when India has taken up the G20 presidency for the first time. Over the year-long presidency, the government will organize over 200 events at over 50 venues. The budget may have elements that portray India as a global leader on several fronts.
So the budget comes in the midst of challenges and also opportunity. India's G20 presidency is one example of that opportunity. After the backdrop and the context of the union budget, it's time for some hard talk.
Quite right. In an exclusive interview, Indirjal Dhasmana speaks to former chief statistician Pronab Sen about the expectations from the budget. He says taxes are not as important as expenditure in this budget. Here's the chat.
Mr. Sen is former chief statistician of India. He'll talk to us over expectations from the budget and priorities of the budget. Welcome, Mr. Pranab Sen, to our budget show. On growth concerns, should budget continue to focus on capex, or do you think that private investment has revived in the economy?
Well, private investment is in the process of reviving. It's almost certain that investment by the corporate sector has certainly revived. There's very strong corporate sector investment growth. The non-corporate sector, which is your MSME sector, the revival in capex is just about beginning now. It's been only maybe 3-4 months since it started, so it's at a very nascent stage. So that would require continued support.
In this regard, you talked about fiscal deficit. Should government continue fiscal consolidation, in the sense that in the current year's budget, the government said that they'll try to bring down fiscal deficit to 4.5% in the next 2 years. Should they continue to lay focus on that?
Well, 4.5% I don't think should be taken as carved in stone. But at the moment, for the current year, the target was 6.4%. Right? Now, to bring it down to 4.5%, you're talking about a cut in fiscal deficit of 1% of GDP every year. Now, that is a very, very substantial amount. I would imagine that the glide path downwards should be continued, but I think it should not be in such large chunks. So maybe somewhere between 0.5 to 0.6% maximum they should be cutting. So if going from 6.4 to maybe 5.8, 5.75, something like that.
When India Inc. and economists met finance minister, they suggested that personal income tax rates should be reduced to revive the economy. What is your take on that?
Well, if you are perceiving a consumption problem, then that is a way out. But if you look at the recent data, consumption does not seem to be doing badly at all. In fact, in the Q2 results, which just came out a few days ago, consumption grew at 9.5%. I mean, a 9.5% growth in consumption should be able to support GDP growth of above 7%, provided investment plays along. So I don't think there is any compelling need to cut the personal income tax rate. But that's one side of the story. There is another side to it, which is that one of the things that has happened in India is that on the production side, if I look at corporates, that is companies incorporated under the Companies Act, and non-corporates, the corporates are facing a tax rate, which is the corporate tax rate, which is about 23%. On the other hand, the non-corporates are facing the personal income tax rate, which is about 42% at the peak. Yeah. Now, that is a very large gap. And what it does is it puts the non-corporate sector at a serious disadvantage relative to the corporate. Right? I think there's a need to level that playing field. Now, to level that playing field, if we have to bring that 42% down to something a little more reasonable, that may not be a bad thing. But you also have to know that you're then talking about the peak rate of income tax. And that will cause a political problem for the government, because if it cuts the peak rates and leaves everything else unchanged, you're going to have everybody accusing the government of favoring the rich, which politically would be very difficult to say.
But given the fact that COVID has widened the income disparity, will that be a correct move?
That would be a wrong move. In fact, under these circumstances, that would be just about as wrong as it can get.
So what can be done? I mean, should it be cut or not, peak rate of personal
Well,
income?
at the moment, I wouldn't fiddle around with it. I think the government should leave those rates unchanged and perhaps look at, so I would say on the tax side, the government shouldn't do too much. It may want to actually raise taxes a bit more on the customs duty side, because I think with the global economy softening, we are going to face a lot of threat from imports. So the government may want to give a little bit of cushion to Indian producers. I think the focus of the government in this budget really should be on the expenditure side, not so much on the taxation side.
You mean capex, or you're talking about revenue?
Well, a bit of both. The damage from the COVID continues to exist among a lot of the poorer categories of our people. And I think a little bit of continuation of that support the government has been giving is not a bad thing to do. Moreover, the government has actually increased its capex. I think it's on track for that. And I think that process should continue. But as I said, that when you're talking about capex, you really need to be very clear about what kind of capex are you talking about. So there is a huge difference between building a superhighway and building a rural road. Okay, the superhighways are usually constructed by very large companies using very mechanized construction technologies. Village roads are created by local contractors using very labor intensive. Now, given the kind of pattern of income disparity that you talked about, it's the rural road type of capex that the government should actually be pushing.
Do you think that schemes like free food grain to 800 million people, that should be continued beyond December?
Well, that depends. As of now, the food grain stocks look a little weak, but then the prognosis for the Rabi harvest is very good. But that's going to come only in March. The harvest is going to happen only then.
Do you mean to say that there should be more money given to Manrega-like of schemes?
Almost certainly. I mean, the reports from the field are fairly clear that the demand for Manrega way exceeds the ability of the state governments to provide work. Now, the state governments are putting the entire blame on the center, saying the center is not giving them enough funds. Whereas the center turns around and says that the state governments don't have enough projects. But this is a fruitless fight. The fact of the matter is that the people who went back to the villages during 20 and 21, the reverse migration, They are still in the villages and they don't have work there. The villages were already had excess workers. And then you had this additional lot who moved back. They need something to keep them occupied. And Manrega is one of the very, very few, in fact, it may be the only instrument that can occupy them.
But there is a distress in urban areas also, and there were talks about launching a scheme similar to Manrega in urban area. Do you think budget could try that?
Well, it could, but the point is that before you do anything of that sort, one of the reasons it hasn't happened, by the way, it's been talked about, I think, since 2012 or thereabouts, ever since Manrega was recognized as a success. The problem was in designing an urban equivalent of Manrega, right? And we still don't have a really workable blueprint. And in the absence of a blueprint for the government to actually do something in a hurry, may be counterproductive.
Thanks a lot, Mr. Sen, for talking to us.
The interview covered quite a wide range.
Yes, absolutely.
Pranab Sen is categorical that reducing personal income tax would be a wrong move and that the government focus should be on both capex as well as revenue growth. So, Ruchika, what's next?
So, this is the last and in some way the most interesting component of the budget with BS. Today, I will simplify for our viewers the task of reading a union budget.
Oh, that's wonderful.
The budget documents, yes, there are about a dozen of them, can look intimidating to the uninitiated, and it is easy to get lost in all the jargon. Let us simplify. Well, the whole thing starts with a budget speech presented by the Finance Minister in the Lok Sabha at 11 in the morning on February 1st. The budget speech is actually not a requirement under the Constitution. If the government wants, it can simply lay the annual financial statements. However, the budget is a lot more than the speech, and the documents tell you all that the speech does not. First of all, there is the budget at a glance. As the name suggests, it gives us all the information in one place, such as the fiscal deficit, revenue deficit, receipts and expenditure. It also gives the government's estimate of GDP for next year. It is the first time anyone in the government says what the size of the economy will be. Then comes the expenditure document. For a quick understanding of broad allocations, various ministry grants and things such as cost of the PM's travel, etc., you can see the expenditure profile document. But if you want deeper knowledge, then that's what the expenditure document is for. The receipt document details tax revenue, non-tax revenue, and government debt. The government also provides an analysis of the taxation revenue strategy. Next is the finance bill, which could seem a bit complicated with all its legalese, but the accompanying explanatory memorandum to the finance bill is where you can find out things like the new tax rate, how the government is using its right to tax people, etc. Some smaller documents that come with the budget include the annual financial statement, which gives every expenditure in one sheet. It also provides information such as how much the government will raise from telecom spectrum fees or disinvestment data. 4 more documents are the medium-term strategy, which outlines the government's fiscal policy. There is the implementation plan, outcome-output analysis, and then a slightly technical demand for grants, which reads a little bit like the finance bill. All of these go way beyond the budget speech to show how the government is making money and where it is spending it.
That was really informative, sort of a ready reckoner on how to read a budget. I'm sure our viewers enjoyed it as much as we did presenting it.
Yes, and don't forget to watch the next episode of Budget with BS on Tuesday.
Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.